Gold daily forecast, November 29th, fxempire.com. The gold markets rose again as the risk on trade came back into vogue on Monday. The hints of a possible solution to the EU and the need for a super bond got the markets rallying in Asian trading. Interestingly enough, though, the Italians supposedly were being bailed out by the IMF, something the IMF categorically denied, and yet the markets just completely ignored the fact that the bailout wasn't coming. Interestingly enough, we pressed on, and that has carried through Asia, Europe, and now the United States. The gold market is being served well, not only by the uncertainty in the markets, because of course it is a safety trade as you buy gold, but the fact that the EU is looking more and more likely to start printing euros next year. So that, of course, will create inflation, which is always good for the gold markets. The recent support area offered a lift at the 1700 mark, and we feel that it is capped at 18. So basically, we are playing it as a consolidation play for the with a bullish bias, of course, for the short term, and expecting a rise to 1800. This got us involved in the 1700 or in the gold markets after a bounce off 1700 today. We prefer to buy dips, and we do fully anticipate that 1800 will be seen. If 1650 gives way, we have to watch 1600 for support, and of course, if 1600 gives way, that would be very, very bearish for the gold markets, and then we'd have to have a conversation about where the intermediate trend is. But in the short term, it definitely looks like 17 and 1800 might be your boundaries going forward.